Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and develop a trade plan for the trading day ahead. Before we jump into the charts, you see we had the Fed out last night. They're, as expected, on hold. There is some pricing there suggesting we could see a move in September. But the chairman was reticent to explicitly signal that in the press conference. But markets took that in their stride, and we extended higher yesterday throughout the day, predominantly driven by the big recovery we saw in the likes of Nvidia, etc., which drove the Nasdaq higher. Today, in terms of event risk, one thing to be cognizant of is obviously this situation in the Middle East with respect to Iran and Israel that has the potential to escalate certainly into the weekend. So I'd be very careful holding any significant risk on your books over the weekend, as there is a potential that could see things develop there over the weekend. From a fundamental perspective, coming into today, we have the BOE set to announce potential rate cut. And then after the close in New York today, we have Apple and Amazon. So if they can deliver in terms of their results, we could see another leg higher heading into tomorrow, which is obviously the non-farm payrolls. So moving to the technical setup, we have on the weekly time frame tested or are getting close to flipping the volume weighted average price bullish. We need to close now somewhere through 55.70. Do note that we tested the 78.6% retracement of last week's range, and we haven't yet got a close through there. If we do get a close through there, technically for me, then the next upside objective is going to be the 127 extension of last week's range, which will put us up into the 56.78 area. Moving to the daily time frame, we see that strong reversal candle yesterday out of the trend line, and we took out most of the we took out the prior 4 days range. We weren't able to break the 5-day range, as we've held that 55.85, which I referenced in yesterday's review, and we are in the potential danger zone now for another leg to the downside, sitting in the 50 to 61.8% retracement area, as this initial response obviously looks like it's a three-way. There is the potential here that we've got another three-way, and that could set up for another three-wave extension to the downside to complete what we refer to as a double correction. And if we hold the current highs, target for that would actually be down at 53.07. Possible, but I would say at this stage less probable, unless we get a significant escalation in the geopolitical tensions, and or Apple and Amazon fail to impress, and investors seek to reduce risk. Moving to the intraday time frame, the weekly plan, as anticipated, we broke through the weekly bull bear zone into our weekly range resistance. We're seeing a little bit of a correction here, but our target for the week remains this 56.33 to 56.49. So on the intraday hourly time frame, I'm just going to change things around a bit here. We are going to have a bull bear zone today in this 55.40 to 55.30 area. So I'm looking at any three-wave corrective move back into this zone, or to look for bullish reversal patterns to engage on the long side. And then, like I say, we are targeting the 56.30 to 56.40. Any move up, any move through there, next upside objective would actually be into the 56.75 to 56.80. That would be a significant range expansion, and would likely see profit taking kick in. Certainly, if we got that move in advance of the payrolls data and the earnings tonight. Less, again, possible, but less probable. I'm going to keep my my main target into this 56.30 to 56.40, as long as we can hold the 55.40 55.30 area. If we fail to hold there, then we likely see a deeper corrective move, and I'd be thinking about something back into the 5500 here, down to the 54.90s, where again, but I would anticipate we could see another we could see buyers step back in to try and move things to the upside. So, in terms of the scenario that I'm most favouring at this stage, will be this type of situation where we pull back in here, bullish reversal pattern, take out the highs, and head to our target area for the week. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.